New week, same market, same time frame, but a new strategy. This week we will look at the 4-hour chart again, but this time not on a trend following strategy. So in this video we will talk about how to catch the counter trades on time so you get the whole distance of the pullback and of course a good risk-reward ratio. So don't waste any more time with talking. Let's dive into the chart right away. So we're here at the 4-hour chart in the Euro-US dollar, and as you see we have a beautiful downward trend here. But what do we want to trade? We don't want to trade the trending direction this time. No, we want to trade the pullback. So this time here, this movement is what we want to trade. We will trade against the trend for this purpose. It's of course important to catch the trade early in order to get the big movement and a good risk-reward ratio. But how to do that? Let's take a closer look. Let's jump to the daily chart first to get a better overview of the situation. And here we see that where we are coming from, the last low is definitely a significant area. Here where the market has reacted to quite some times as support and resistance already. And let's see what we have else into our trading direction. There's also this level where the market has reacted to quite some time, spent here some time and here had the low at this point. But of course the most significant one is the last low down here, where the market has found a big resistance in and reversed at that point. To analyze these major structures, these key points of support and resistance is the first step for our trading, because these of course are the marks we have to pay attention to for the potential turning points. So after analyzing these, let's jump back to our 4-hour time frame, back in this beautiful downwards trend. Let's zoom in a bit. So regarding our analysis before, this is the area where we expect the market to come down to before finding resistance in it and starting a pullback. This is an area where the market probably spends some time in, but the more significant is that one. Zoomed out, it's better to see. It's this area where the market has made its last low, and this is the area where the market is most likely to come back to. So in this case, these are the more significant areas that we pay attention to. For that reason, I will make them red so we don't get confused. The red ones are the significant ones in this setup. So let's see how the market develops and then look for an entry if our setup works out. Right here, the market is coming right into that area where we have our major support and resistance level. Always remember to be not as exact. The market is not paying any attention to our drawn line, so it's always more of an area, but it's definitely running into that support and resistance area here. But we need confirmation first that the market finds resistance in that area before we look for an entry. And here the market is forming a beautiful double bottom. So here it touches the first time, here the second time, building a double bottom chart pattern. So a bullish reversal pattern being our confirmation for our significant area here, for our turning point. So this is the area where we place our order to go long when the market appears to move with a momentum from this area now into the long direction right here. Of course, we place our stop loss below this key level of support and resistance, and our target is this area up here where we had our last low before, and I will put it a little below. As explained before, the market isn't always as exact, so to make sure that we get hit or that our target gets hit, I will place it right in this area, and this makes us a risk-reward ratio of 3.4 and a risk of 108 pips, so a really good setup. Now what's left to say is, let's see what the market does. So right at this point, the market hits our target, and looking a little further, the market bounces off that level again, continuing into the short direction afterwards. So this is a good pointing out again why I always use not exact lines but areas, since sometimes the market doesn't barely reach that level, and wouldn't be a pity if we don't get caught in our target here. Let's make one more example real quick, this time in the upwards trending direction. So we trade the pullback short. So we see here we have a new building upwards trend, and I've already drawn in some significant support and resistance levels. I will show you on the daily time frame real quick. And here you see that this is the level that we are coming from. This was the last resistance in the market to the top, and the market has reacted to this level quite a lot already here. Here it was a top here again, and here also here as a bottom, so a really strong support and resistance area that we have here, and also a significant area that we have up here where the market seems to be reversing at this point, since it has reacted to it before here and here, so it's definitely relevant for us. But back to the 4-hour time frame. Here we see the levels. So we are expecting that the market is finding resistance here. But if it doesn't, the latest would be here. But this is the level where we are speculating on at the moment from this current point of view. And this is the level where the market would probably go back to when it bounces off that level and pulling back till this level. If we apply the Fibonacci retracement to make clear, it would also be exactly in the area where the markets are most likely to reverse. So an additional argument for that as well. So let's see first what the market does. So here we see the market touch that area that we have drawn in where we expected the market to find resistance. And this is the point where we need confirmation for our entry, which we find in this hammer candlestick pattern, short body and really long wick to the top, which shows us that it tried to go through, but the power of the bulls got lost here. The bears took over. A bearish candlestick pattern that we use for our short trade here right after that candle. Our stop loss, of course, above the significant key level here. And our target, of course, into that area that we are expecting the market to reverse to before it will probably turn back into the long direction. This gives us a beautiful risk-reward ratio of 3 and a risk of 47 pips. So a good setup. Let's see what the market does. The market came down with momentum, hit our target, and we cashed in a beautiful reward of 3 times our risk. So this is a great possibility to trade pullbacks. And sometimes, of course, if you catch the pullbacks right at that point where the market reverses, it's also possible to catch even longer trades. But pullback trading in really trending markets on the 4-hour chart is a really good possibility for clean and good trades. If you prefer trend following, that's totally fine. Then jump back 1 week ago where I've made a video just on that on the 4-hour time frame. But this is, of course, another possibility for trades with a good setup in a clear and beautiful trend here on a 4-hour time frame. So it's always depending on the personal preferences. But this is, of course, a really profitable strategy that we looked into today. I hope you like it. If you tested, please give me a feedback in the comments. It would really interest me how this works for you. And that's already the end of this video. I hope you enjoyed it. If you did so, please give me a thumb up. And if you haven't done so, subscribe to my channel so you don't miss out any new videos coming every week. So see you next week with the next video. And if you don't want to wait until then, you'll find below this video a link to my website. See you there. Bye bye.